Welcome to my channel. I'm Scott, and in this video I am going to walk you through the process of valuing AbCellera's stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. AbCellera is a biotechnology company that uses its proprietary database to research and develop human antibodies to address pandemics and common diseases. The company is headquartered in Vancouver, British Columbia, Canada, and was founded in 2012. It went public in 2020 and trades on the Nasdaq and Deutsche Börse. It utilizes a proprietary technology platform which develops medical countermeasures within 60 days. It is unheard of to do this within 60 days. Medical countermeasures are FDA-regulated drugs that can be used in the event of a potential public health emergency stemming from a terrorist attack or naturally occurring disease. COVID is a great example of this. The company says drug development fails too often, takes too long, and costs too much. That is due to limited technology and access to information. This company is going to solve those problems since they are more focused on the technology side as opposed to its competitors, which mainly focus on the medical side and lack the necessary technology skills to make the drug discovery process more efficient and streamlined. To drive my point home, it costs $3 billion and takes 10 years to develop the average antibody drug. Even with all that work, the failure rate is 90%. The company develops partnerships with small, medium, and large drug companies. The drug company tells ABCL the idea for the therapeutic agent, and ABCL performs the entire discovery process and validates the work. It then turns everything over to the drug company for clinical trials. It locks in royalty agreements with other companies. That creates a long and healthy revenue stream. 85% of its revenue in the first quarter of this year was from royalties. In the first quarter of 2020, they had zero in royalties. The first quarter of this year, $172 million. Most of that is from COVID, but there's still a lot of potential with their platform. Its process is so advanced, all the pharma companies are willing to pay them an ongoing fee just to work with them. Every time they work with a company, it makes their database more thorough, advanced, and refined. In 2016, the company received a $645,000 grant from the Bill and Melinda Gates Foundation to develop a test for tuberculosis. Peter Thiel is a director of the company. He is the founder of PayPal and Palantir. He is also an early investor in Facebook. In early 2020, the company announced it had begun the world's first study of a potential antibody treatment against COVID-19. This was in collaboration with Eli Lilly. Final approval was announced in December 2020, which was considered extremely quick and impressed the biologics community. Other partnerships include collaborations with GlaxoSmithKline, Novartis, Pfizer, Sanofi, Teva Pharmaceuticals, and many more companies. Let's get started with the model. This is a mid-cap company, 5.6 billion market cap. They're trading at $21 a share, and they have 271 million shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. So you can see they had their first positive free cash flow in 2020, then it jumped way up to 120 million in the trailing 12 months. Net income is the profit or loss on the income statement. It's revenue minus expenses. And that was positive 119 million in 2020, and then doubled to 238 million in the trailing 12 months. Revenue is a sales for the company, and their revenue grows like no other company, from 9 million up to 430 million. This is the company's income statement. The top line is the revenue, the sales. Below that is the cost of revenue. These are the expenses directly related to generating the revenue. Revenue minus cost of revenue gives you your gross profit, and they have positive gross profit every year. Below that is operating expenses. This is mostly research and development. Then below that is operating income. And their operating income was under $1 million in 2018. It grew to almost 330 million in the trailing 12 months. And the bottom line of the income statement is their net income, which is way up to 238 million. At the end of 2020, it was only 119 million, and then 1 quarter later, which is a trailing 12 months, it more than doubled. This is their revenue in the first quarter of 2021. So you can see a bulk of their revenue comes from royalties. They also receive $20 million in licensing fees from other companies. They get $4 million from research fees. And then once certain milestones are hit on the drugs, they also get a payment. And if you look in the first quarter of 2020, it was almost zero in every category. They only had a few million dollars of revenue in the first quarter of 2020. This is the company's statement of cash flows. The top line is operating cash flow. That's how much cash the company generates from its operational business. You could think of operating cash flow as net income converted to cash, because net income is your accounting profit and loss. It's not actual cash. So you can see they generate a lot of cash flow in the trailing 12 months, over $130 million. And they invested over $12 million CapEx in the trailing 12 months. CapEx is investments in property, plant, and equipment. Operating cash flow minus CapEx gives you your free cash flow. And they had a lot of free cash flow in the trailing 12 months, over $120 million. Way up from $8 million in 2020. Before 2020, they really didn't issue much debt to fund their business. But starting in 2020, when they started bringing in a lot of revenue, they started issuing more debt since they had enough money to pay the interest on their debt. They added $100 million of debt in 2020, paid down $20 million. So they added about $80 million of debt that year. They IPO'd in 2020, so they generated nearly $600 million of cash flow from that IPO. So they have a ton of cash on their balance sheet to fund their operations for several years. Let's look at the capital structure. $957 million of equity, $19 million of debt. So they're 98% equity, 2% debt. And their net debt is negative $667 million since they have so much cash on their balance sheet. Their weighted average cost of capital, which is a blend of the cost of equity and debt, is 9.66%. And that's a discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's $14 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $11.5 billion. We divide that by 271 million shares. And we get a calculated stock price of $43. They're trading at $21, so they're trading at a 52% discount. It's a strong buy according to the model. I estimated their future free cash flows based off of the growth from their prior free cash flows. I also looked at how big the market is and how much of an impact this company would have. I do think there's a good chance their free cash flows would be greater than I projected. I always try to be a little conservative, but based on their growth, they should have a lot more than $1 billion in 2024. Even with a conservative estimate, I'm still coming up with a stock price a lot higher than they're trading at. 4 analysts priced this stock and the average price target was $50. The low was $45, the high was $53. This is the stock price since it started trading. It did IPO at $20, but I guess the price was driven up really fast to over $60 a share. But then as most stocks do, they come down from the IPO. So it's been coming down a lot ever since the first day. The stock may come down more, but it's hard to predict when the bottom is. But I try to avoid timing things. I just buy the stock and hold long term. They work in the antibody and cell therapy market. The antibody market is expected to grow from $143 billion to $261 billion. Cell therapy is expected to grow from $1 billion to $17 billion. So especially during a time like COVID, a lot of money will be poured into these types of industries because we want to avoid something like COVID when the entire world was shut down. And it almost killed all the economies. And it killed a lot of people as well. So we want to try to nip it in the bud and figure these things out before it reaches a global pandemic. So all this money will have to go to some of these companies. But I think this company will be a great candidate to receive the money since they're going to be a big part of this process. And this stock has come down a lot since its first day. It's down 63%, while the S&P is up 37%. The 52-week low was 20, the high was 72, and the stock is trading below its 50-day and 200-day moving average. About 1.5 million to 3 million shares are traded each day on this stock. Of the 271 million shares outstanding, 152 million are on float. Most of the other 120 million not on float are held by the CEO and founder of the company. 36% of the shares are held by institutions, and almost 8% of the shares on float are shorted. A lot of these big banks and hedge funds, they bought the stock at $20. Then investors like me and you drove the stock price up to $50, $60 a share. Then these hedge funds sold off and they shorted the stock. Now the stock is down to $20. So they'll probably buy the stock price some point pretty soon and then rinse and repeat the process. The stock is down 33% in the past 90 days while its industry and the market are up. Earlier I showed you that analysts are bullish on this stock. The average price target was $50. But analysts are forecasting their earnings to decrease 69%, their revenue to decrease 40%. So on one hand, analysts are bullish, saying the stock price will go higher. On another hand, they're bearish, saying the earnings and revenue will go lower. That's why I don't really look at analyst estimates. The only reason I show them on my channel is because people were asking for it. But I try to do my own due diligence and not listen to others. Because other people have ulterior motives. They own the stock, or they're being sponsored by the company. Also, if you talk really highly about a company, you tend to get more views and more likes. But if you bash a company or are bearish, then you'll get less views and more hate. I just try to tell it like it is. So if you invested $10,000 into this company the first day it started trading, you'd be down to $3,700 today. Even though they IPO'd at $20, it looks like the stock started trading at $59. So the only people who could have bought it at $20 were insiders or hedge funds or large companies like that. It's not too fair, but that's the way it is. It's all about the money. Carl Hansen, the founder and CEO of the company, owns 21% of the stock, then Data Collective, then Viking Global, then Baker Brothers. And they gave Peter Thiel almost 4% to be on the board, which is a smart move because he's able to grow companies and he has a lot of connections. Plus, there's been rumors that Palantir may acquire this company, and if they do, then your stock price can double or triple right away. Because Palantir doesn't work in biotechnology, but they're in big data analytics, which is somewhat similar to what this company's doing. Let's look at their financial ratios. Their PE is 23, which is pretty close to the market median. PE is stock price over earnings per share. To calculate earnings per share, that's net income over shares outstanding. So they're bringing in a decent amount of net income relative to their market cap. Their price to sales ratio is a bit high at 12.9. So that means they're not bringing in that much revenue relative to their market cap. But when the company first came out, their market cap was double and their revenue was a lot lower. So their price to sales probably looked terrible. Now the number is a lot closer to reality. And I think it's going to get even better each quarter because they're bringing in more and more revenue. They have a really good price to book ratio at 5.8. That's because they have so much cash on their balance sheet from their recent IPO. Their return on invested capital is amazing, 84%. They have very little debt, so they have hardly any interest payments on their debt. They do have a really good ROE at 25%, and they have a ton of current assets relative to their current liabilities. Their current assets are $685 million of cash and $216 million of receivables. The company is really well capitalized. They have a lot of cash to work with. So they could even acquire other companies or continue with aggressive research and development. The best way to look at ratios to compare them to companies in the same industry. I've done videos of 16 companies in the same industry as ABCL. And if ABCL has a number in red, they're worse than the average. If they have a number in blue, they're better than the average. They're pretty much better in every category except market cap. If you're a big proponent of ratios, then you'll love this company. They don't have great ratios, but their industry has pretty weak ratios, so it makes them look really good. But even so, ratios help equalize companies. So even though their price to sales isn't amazing, but there's companies with really bad price to sales like Moderna, which is a huge company. To summarize, I have them trading at a 52% discount, but this company is doing some amazing things. It's really exciting, and I'm not usually this bullish on a stock. They're really advancing the process for discovering medicines and vaccines. If they could save as much time and money as they're saying, the sky is the limit for this stock. You could make a 5, 10, 20x return. They have proven the process with COVID, but some people think this is a one-trick pony. I don't think so. I think there's so many opportunities out there for them to develop drugs and vaccines. There's lots of diseases out there that the medical community can't find a cure for. If this company can move that process forward, it would just be amazing. I rank their free cash flow 7 out of 10, their revenue 10 out of 10, and I rarely give a 10 out of 10 on this channel, and their ratio 7 out of 10. So let me know what you think. Give this video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.